We knew we had to model no rents for 3 years, which we did. Shortly after we closed in 2009, Nomura walked in and leased the majority of the vacant space. And we then sold the building eventually to New York REIT and SL Green for $1.3 billion.
Wow.
And I always say that today's fully leased office building is tomorrow's workout because eventually those tenants will leave and it will be vacant. So here we are again. Cravath's 15-year lease in 2009 just expired. The building has become vacant. And now it has, I think, $1.3 billion of debt that's maturing. But the building now is 15 years older.
I want to remind you of a great phrase that I think of when I hear you speak, and it's by Winston Churchill. He's one of my dead mentors, if you will. And he said when he was going up against Hitler, if you're going through hell, keep going.
Exactly.
And that really rings true in the sight of what you see and the way you discussed the borrower's dilemma. It is not with his or her internal factors of who they are and what they've done wrong or right, although seemingly they are talking to themselves right now about what they did wrong or right. It's really the external factors that are putting pressure on themselves.
Correct.
And they need to know how to traverse that terrain. And you, my friend, are giving them the olive branch, specifically in the sector of multifamily.
Correct.
To game their timing of their inevitable exit. So it's kind of like being in the casino a little bit, although without the gambling component. The longer you stay in there, I guess, I don't know, what would the ending of that sentence be? The longer you stay at the casino when in multifamily real estate, what?
Well, I think unlike gambling, hopefully, given that we have a housing shortage and the new development construction pipeline has been reduced, there should be positive absorption. Rents should go up. Your NOI should go up. And therefore, you should be able to refinance your loan with cheaper and better financing or sell it at a profit down the road. So we're at the trough of the market. You never want to sell at the bottom of the market. You want to hold on and try to get some of this recovery that we anticipate happening over the next couple of years.
So holding on is a concept that you have touched on in our discussion here. And you're trying to relieve that, of course, with financing. Holding on is a concept that my clients understand quite well. We have some very serious and big clients that have to hold on and control their assets, even when they have what's called negative carry, right? Currently, there is negative carry. The disparity between what the value of the property today is worth and what it is tomorrow is actually growing, okay, in certain asset classes. What advice would you have for those people where it is growing? Do you cut the cancer or do you live to fight another day? I wonder what you think.
So you're saying your clients have appreciating assets?
Depreciating assets.
Depreciating assets. You think the value of their asset is, the market value of their asset is declining, but they have a negative basis.
Correct. So the value of the property is not worth what the value of the debt is today. It's upside down, which leads me into the Worldwide Plaza case, which I want to kind of discuss with you, which is a good segue to discuss. You know, what's your opinion on, you said holding, right? Holding on, traversing. When is the right time to let go if people and actors are like you in the system? You kind of give hope to the system a little bit, in my view. What's your opinion on when someone should let go, when someone should sell? Tell me.
So I think Leo here is referring to the fact that in 2007, by history, Harry Macklow bought Worldwide Plaza for 1.8 billion, and then the GFC hit, and similar to Charles Cohen, he had a Fortress personal guarantee loan that had something like 500 million coming due. And so he was forced to sell the General Motors building and many of his trophies in New York City in order to pay off his Fortress personal guarantee loan. And then came due the bridge loan on many of the EOP Blackstone assets he bought in New York City. And one of those assets in particular was Worldwide Plaza. Worldwide Plaza had 1.8 billion of debt on it. Harry Macklow had only put in 50 million of equity. And so because of my experience in banking, I knew how to work through the various layers of mezzanine debt, and we ended up eventually buying the asset from the most senior lender, Deutsche Bank, for something about $450-500 million. And one thing I learned during the RTC is during a financial crisis, when there are no commercial banks making new loans, the selling bank will always provide you very attractive seller financing. So we're very fortunate to get great seller financing in the middle of the GFC from Deutsche Bank, who was selling us their loan. It was a very calculated risk. At the time, it had about 1 million square feet vacant. And when we did a large block analysis of New York City, we realized that we were one of the last blocks of space available for lease in Midtown in 2009. And when we got the list of expiring 1 million square foot tenants, we knew it was going to be a tenant probably from Brookfield Place. But that rent roll all had 3 years left. So we knew we had to model no rent for 3 years, which we did. Shortly after we closed in 2009, Nomura walked in and leased the majority of the vacant space. And we then sold the building eventually to New York REIT and SL Green for $1.3 billion.
Wow.
And I always say that today's fully leased office building is tomorrow's workout, because eventually those tenants will leave and it will be vacant. So here we are again. Cravath's 15-year lease in 2009 just expired. The building has become vacant, and now it has, I think, 1.3 billion of debt that's maturing. But the building now is 15 years older, and so all the systems and elevators need to be replaced. It's now arguably a more remote and worse location than 15 years ago, because everyone today wants to be by Grand Central or Penn Station and the transportation hubs. However, there is still now probably a big block lack of space available. So maybe you could fill us in on the new chapter, because one, I knew back then only to deal with buying loans from commercial banks or insurance companies, because they can make decisions and sell loans, where if a loan is in a CMBS trust, those frequently are very hard to break loose, because the special servicer wants to try to work it out for a couple of years. So until income really starts going negative and the special servicer has to start funding some of those deficits, they will keep, extending and pretending, as we say. And so it's right now in the legal courts between Gary Barnett, who's one of the savviest New York City land players, battling out with SL Green and RXR, two other, 800-pound gorillas in the New York City office scene. And it's actually happening at a valuation that doesn't make sense to me. We bought it for $250 a foot. It's arguably worth less today. And I think the most recent appraisal was even less per square foot.
Correct.
But the loan balance, the senior loan balance, is at 920 million, and Gary Barnett bought some of the mezz, so his basis is even higher. So I'd love to get your view on how you think it will go through the legal court and where the situation is.
So what I want to do before I answer your question is connect what we have been discussing to the current status of Worldwide Plaza. We discussed debt. We discussed timing. We discussed pressure on the borrower. We've identified certain risks, external risks. So I wanted to connect Worldwide Plaza to what we were currently or previously discussing, which is risk in the market and how you size it, then timing in the market and how you size that, the borrower, the asset. All of that has to be underwritten. Now, getting in the mind of Worldwide Plaza and applying those concepts, I actually want to bring it back to you, but I will give you my opinion on what's going on in the legal sphere. What's happening in the mind of Gary Barnett? What's happening in my opinion, in Gary Barnett's mind is he has a focus. He's aiming really high and really wide with the Worldwide Plaza building. For I think several reasons. I think he's going to have, a renaissance with this building. I think he sees it as an investable asset. And I believe that at those numbers and at that height, he is not only making an example of what the future of real estate is going to be valued at, but what he can value that value at in the future. And I don't think it's 5 years away, frankly. I think it's maybe 18 months away or 16 months away, for the very simple reason that Gary is a very savvy investor, and he does have a clog net of a lot of assets he had bought and sold and developed, and he is the land king. So he has a really good idea about what he wants to do with that asset. And I want you to share what you believe he will do. That's number one. Number two, in order for him to traverse that asset's impossibility currently, that there is no longer a crevasse, right? That makes the impossibility greater, that the valuation has plummeted from $2 billion to $345 million as of April 2025, and the impossibility keeps getting even greater and wider, right? And number three, the actors, SL Green Realty, and I believe the other RXR have really dropped the ball, I think. I think they could have been more proactive as an institution to find a replacement actor. But maybe that is the market, and the market telling RXR and SL that no matter how big or how 800-pound gorilla you are, you can't really find anything right now because the market is narrowing. So in all, it culminates into a litigation. It culminates into a litigation of the focus of what Gary Barnett has for it and what SL Green and RXR are wrestling with. Both have impossibilities. The first impossibility is, what the fuck am I going to do with this building when I get it? And what the fuck am I going to do to not lose this building and keep going? One deals exactly with time, is what you were discussing. I think it's a timing concern for SL Green and RXR because they're not bad borrowers, right? They're just caught in, I guess, the drop of the, what's that game? What's that game when you drop the ball? No, when you drop the ball into the roulette, right? The ball just dropped on red, not on black, and they're caught with their pants down with Cravath exiting. Now, barring that proactivity that they can have got or went into to replacing Cravath, I think ultimately they did the best they could and they got stuck with it. But Gary's impossibility has just gotten exasperated, and so has SL Green and RXR's, because now they're in a tug of war to this building and this asset. So we know that the asset is extremely, extremely valuable because they're both fighting for it. And the court has said that the process of how Gary Barnett had purchased and assigned these interests on the mezzanine level. I think it's $190 million, and now wants to sell it ultimately to continue to own the building. She has issues with that, particularly to chill the bidding process. So what the law is actually looking at, it's looking at the fairness of the process, not necessarily the purpose of what that building is only ultimately going to become. Who the hell knows? Maybe it's going to become a condo building or residential. You never know, especially with the market being upside down. So that is the legal backdrop. There's a wrestling of this property between two actors, okay, that are very, very savvy
For just the mezz.
for just the mezz, but ultimately for the building. Because if you own the mezz, you now own the building. Now, albeit with a senior loan. What the court is saying is, let's look at who is behind the first and the senior, whether Gary Barnett wants to chill the bidding process and ultimately take that building for himself, which would fly against the face of a judicial, I guess, temperament of saying, I can't let this happen, because if I let this happen, that means that the market is working against himself. Why is the market working against itself? Because you cannot have a fair exit or disposition of an asset when the process is rigged. That's why you have laws. That's why you have rules. And that's what the court is currently examining, the commercial reasonableness of the disposition of Gary Barnett's UCC interest in the mezzanine loan of $190 million. And currently, we're about 2 days away from a boatload of questions that Gary Barnett has to answer. And ultimately, we're going to get those answers because the court required it. But I wanted to peel back the onion a little bit with you and get your take about what the purpose is for Gary Barnett and what he wants to do with the property, and why SL and RXR are trying to wrestle their way into that property and keep it. There must be something very, very valuable about that property. I wanted to know what you think their plans are for it and how you would handle the restructuring if you got your hands on it.
Wow, that's a big question. I will start with the fact that the office market is recovering very fast in New York. In fact, the Class A office space, which only a couple of years ago was at an 18% vacancy rate, is probably this year going to dip below 10%.
Okay.
And once you hit 8%, you should start having good rent growth. One. Two, there is tremendous leasing activity happening. People love being in New York. And there are very few large blocks of space left, Class A, that's available. So we're seeing values of New York City office building increase quite a bit. In fact, SL Green bought out one of their partners at 105th a year ago for like $375 million, and they just sold a partial interest to Rock Point at a $500 million valuation. So in 1 year, that's almost a 30% increase in value, mind you, on Park Avenue. But that is just an example of how quickly the office market is recovering. And one doesn't know if Gary Barnett potentially has a very large tenant in his pocket, similar to how we knew that there was going to be a tenant from Brookfield Place probably ready to come to the building when we bought it. So you don't make such a big bet on 1 million square feet vacancy without knowing who your user is going to be. So whether Gary is thinking of converting the building to luxury condos, because it does have spectacular views, high ceilings, practically column-free office space. So one doesn't know whether he's going to convert it to luxury condo or whether he has a very large office user in his pocket. He must have a highly confident use in his mind for making such a large bet. Secondly, and I think we've discussed this before, it really depends on what's going to go on with the senior loan, because that's where your investment basis is really set. And the void between the $920 million par value of the senior loan and the $350 million appraisal there's a big void there, and understanding what happens to the senior loan is really much more critical than even the mezz.